Hi, this is Michael Yardney and welcome to my regular property market update. Let's face it, what we're hearing from the media at the moment is scary stuff, especially for those of us who own property. Each day brings another report, and more often than not, more doom and gloom. The dreaded R word has been uttered, and some doomsayers are suggesting that you should sell up all your properties before that almighty crash arrives here, just like it has in the USA. However, other commentators say our current market presents some great opportunities. On the one hand, some economists are predicting 1 million unemployed in Australia, and others suggesting that unemployment will only reach just half that figure, maybe about 5%. So is it a good time to buy properties, or is it time to sell up everything? I wouldn't blame you if you were confused. With all the doom and gloom talk around, it was really great to see the Reserve Bank of Australia Deputy Governor Rick Battolino recently taking the opportunity to put some timely facts on the table about the state of our household finances, the economy, and Australia's investment and property markets. He did this last week before the latest 0.75% cut in interest rates was announced. In his speech, the RBA finally provided some balance into the economic debate, something that's been sadly lacking in recent times. Clearly, the views of the more gloomy commentators have attracted lots of media attention, and obviously it's frightened many Australians, and it's about time some of these views were challenged by the Reserve Bank. Without playing down the seriousness of the current global financial crisis, and it is serious, Battolino sought to put some recent developments like falling share prices and the pressure on household finances into perspective. The Deputy Governor is confident that Australia can sidestep the recessions in other parts of the globe, and has downplayed fears of lower house prices in Australia. When discussing the differences between the Australian and the United States housing and mortgage markets, Battolino was quick to point out that the two are really poles apart. He explained that there's an undersupply of housing in Australia, which of course is a marked contrast to the huge oversupply of empty properties in the United States. The overhang of unsold houses in the United States has created downward pressure on home prices, and at the same time mortgagees, builders and developers have been forced to sell. Clearly, this isn't happening in Australia. Here we've got a shortage of housing, which means there are buyers waiting in the background for better circumstances. They're waiting for things such as lower interest rates, or rising incomes, or for the first homeowners grant to help them enter the property markets. This latent underlying demand for housing is a factor that's going to support our markets. Now, the 0.75% interest rate cut the Reserve Bank delivered this week, and the further rates they're going to deliver, and the first homeowners grant, are probably going to give some of these home buyers that little extra push they needed. The Deputy Governor explained how the cycle in the Australian housing market, rather than following the USA, is in fact at a more advanced stage. What he said was it's probably leading the United States by about 3 years. You see, he thinks the Australian housing market was at its hottest in 2003, where the United States market peaked in 2006. The Deputy Governor also explained the important differences between lending standards in Australia and the United States. Essentially, lending in Australia was to borrowers who could afford the loans, and obviously this is in stark contrast to the marginal subprime US lending that was lent to lots of people who could never afford to repay the loans, who never should have got the loans. Here in Australia, the lending boom was concentrated on existing homeowners who traded up to bigger and better houses and bought investment properties. And these homeowners had plenty of equity in their homes. Many of them were people in their 40s and 50s who previously had low levels of debt. Interestingly, in Australia, at the end of the boom, home ownership rates was no different to the start. In both cases, about 70% of Australians own their homes. Now, while some commentators are arguing there's no socially productive purpose served by this increased lending to middle-aged existing homeowners, it did mean that loans largely went to borrowers who had a strong capacity to service and repay them. As a result, whereas most other countries with housing booms have experienced a strong rise in arrears in housing loans once the boom ended, you know what I mean by that, that loans were not being repaid, people were late in their payments. Here in Australia, there's no more arrears than there were at the start of our housing boom in the middle 1990s. And of course, It's really low. Our arrears rate is so low compared to international standards. Another interesting thing the Deputy Governor pointed out was that arrears in Western Sydney, that part of Australia that suffered the most, have not worsened recently. And he also pointed out clearly that the major banks had arrears that were very, very low compared to the rest of the world. The Deputy Governor has even tried to warn investors that they could miss out on above average returns by being too risk averse. Now, isn't that extraordinary that the Reserve Bank has to point out the longer term benefits of investing? So, is it the right time to buy more properties? Even if the market hasn't bottomed, and let's be honest, it probably hasn't, remember, you're not buying the market. You're buying an individual property in that market, one that you'd be happy to hold in your portfolio in the long term, and one that was bought sufficiently below market price so that even if the market fell a bit further, you'd still have bought well. So you've got to be careful in what you buy, and currently there are many secondary properties on the market, properties in poor locations or on main roads, and these properties are just not selling, and even though some of the vendors are very desperate and lowering prices, please stay clear of them. On the other hand, I suspect there's going to be some outstanding buys over the next months, leading up to Christmas. Any vendor who's put their property on the market and hasn't sold it is going to get more and more nervous as we get closer to Christmas. I've found that as it gets near to the end of the year, many sellers almost give away their properties to get the sale over and done with before the Christmas break. So my question to you is, are you ready to exploit the opportunities that are going to arise? Now, we're going to keep you updated through articles from Australian property experts on our Property Update website. And you can always get the latest property news from the media from Australia and around the world on the Property News page. And I'm going to keep you updated with my video commentaries like this one. Check out the Property Update TV page on the site. Now, to help you further, the team at Metropole are also conducting regular free property briefings in Melbourne, Sydney, Brisbane and Perth to help investors understand their local opportunities in their markets. Please join us at one of these. To reserve your place, just have a look at the notes down at the bottom of this page. Click on the link at the bottom of this page to get more details and reserve your spot. Also, if you'd like to read the whole of the text of the speech of the Deputy Governor of the Reserve Bank, I've put a link for you just down below also. Look forward to keep bringing you these updates on a regular basis. This is Michael Yardney.